Among the major monetary policies expected this week is the one from the Reserve Bank of India. India has been the fastest growing major economy for over a year now. But is it time to cut interest rates to keep growth on an upward trajectory? Take a look at this next report to find out.
The Reserve Bank of India is expected to maintain its current interest rates after the upcoming Monetary Policy Committee meeting on February 8th. Despite the government's significant reduction in fiscal deficit during the interim budget of February 1st, most experts anticipate a status quo, postponing potential rate cuts to the second half of 2024. The reduction in fiscal deficit has provided the RBI with some room for rate cuts. After a series of policy rate hikes between May 2022 and February 2023, the central bank has maintained a stable policy rate for the past 12 months. The current liquidity situation, marked by the withdrawal of accommodation policies, has led to a high liquidity deficit in money markets. Experts suggest that the RBI may continue with the current policy as domestic growth supports the RBI's growth forecast of 7%. Fresh uncertainties arise ahead of the central bank's February meeting, including concerns about a potential disruption in the global supply chain due to escalating hostilities, particularly after attacks on cargo ships by the Houthis. Major shipping companies are redirecting vessels from the Red Sea, a critical route for Indian sea imports. The chief economic advisor to the Government of India highlighted that as the top risk for India.
Two risks, one could say. One is that the global geopolitical disturbances become large enough to disrupt trade flows and also disrupt the flow of raw materials for us.
In addition to these global factors, the possibility of a faster decline in global interest rates has diminished. The US Federal Reserve indicated that rate cuts are unlikely in March, and the UK rate-setting panel opted to maintain rates for longer. The global interest rate trajectory now becomes crucial for the RBI's decision-making. If the Fed continues to signal no rate cuts, it could influence the RBI's cautious approach despite favourable domestic conditions. Bureau Report, WION, World is One.